Hi, good afternoon, everyone. Honestly, I'm a bit surprised to see people here because I thought people would be having their reunion dinner. Most of you, or you're just about to have your reunion dinner. All right. So before we even start off the session, Alexis and I just gonna wish you all a happy Chinese New Year. For those of you who are of working, be generous, give out a lot more ang pao. For those of you who aren't, be happy receiving it. And let's hope that for the year of 2026, the market will be generous to us and give out a lot of profits to us all. All right, hi Jackie. All right, so with that, without further ado, for those who are new, Alexis is concentrating on fundamental updates. I'm concentrating on technical updates, specifically using the currency strength index. All right, so with that, without further ado, let me jump to my trading view. All right, so I'll just give a brief explanation. What is currency index? Is that it is a basket of currency it, that is weighted against the yen. Yeah, so it's like a yen ETF of sorts. So if usually people who wants to trade with or without yen, with the yen or without against it, they would, for technicians they might probably look at the indexes itself. Yeah, so that gives the most accurate picture of all. Secondly, I'm a swing trader, so I always look at the weekly chart to give me a view of what's going on. Yeah, so this is a zoom out view. So with that, my usual style is that I will pair this usually position the strongest on top. I There are pairs which I don't know what they are doing. I'll put them in the middle, and pairs which I think they might possibly weaken, I'll put it in the below. Yep. So that's how I do my weekend analysis. So with that, let me jump to yen. So you can see that the yen currency index, you can see is possibly bouncing off a double bottom. Very very nice technical, right? And with that, you can see that this is a very very nice looking engulfing bar. Yeah, if just a bit more, it might just engulf the past two bars. So now, of course, please don't ask me anything about fundamentals, or I'm just looking at lines on the chart and bars on the chart. With that, there's a good possibility that yen might actually strengthen all the way to, let me see, $67 or even all the way up to $70. Yeah, so there's a pretty good run out there. Now, for daily and swing traders, I think if if the setup does happen, you can happily hop on the car for it. So second on my list is actually the Kiwi index. Now the Kiwi index, now although I use round number $60 as my horizontal levels, this is a very very nice psychological levels in fact. But the fact is that I cannot ignore that Kiwi in the past is still very very messy in this zones. Yeah, so I got to admit that this is not a very very nice psychological level to deal with. But we can see that in the past, although it's messy, it does it does have a late bounce of this area, and it might peak above all the way to 63. So you can see that Kiwi has a weak break the following week, tried to stay above. Hence, that leads to my conclusion is that it might actually go all the way strengthened up all the way to 61. Yeah. So Kiwi second on my list that it might strengthen all the way under here. On the other hand, Pound is really in the middle of nowhere between 140 and 130. This might look like a very nice short-term horizontal level that we have here. But until Powell proves to us that where it might want to go, because you can see that the previous week, in fact, 2 weeks back, it did have a rejection. It stayed below it, but wasn't really a good bar to bank on. And then followed by the last week, we have a doji. Yeah, so it does want to break, but we don't know whether you want to break to 140 or 130. So with that being in mind, I'd rather stay out of Pound's way for time being, unless you are looking for a breakout trade. Now, Swiss is really interesting. You can see that in the past 1 year, past 2 years, in fact, it doesn't even reach above 130. Yeah, so price comes here, you can see that it got gapped down, and then it comes to here again. So for some reason, it does want to stay at this level. It might want to go above it, but unless it gives a very, very decisive break, I prefer that we stay out of it. Again, unless you are trading within a range and waiting for a breakout trade. Yeah, so pound Swiss, I'd rather not touch it as a swing trader analysis. Now, euro and pound having very similar sentiments. You can see that at this level, very, very short term, horizontal level that we might have here. And even if it does goes up, I would say that it has a very, very short distance to 120. So with that, I'd rather stay out of its way until it gives us a very, very nice rejection again at 120. Then I might trade it down all the way to 115. Now, Aussie on the other hand, it has gapped up. Now, for pairs, it has gapped up a very nice looking psychological level, which is 70. I'd rather it close the gap, come back and retest, then I might trade it up against. Now, for a very, very long time, all right, so this 2024, even 2023, you can see that it has not reached up above 70 for a very, very long time. Now, it might have something to do with its gold or even commodities pair characteristics. I do not really know, but as a price action trader, as a technician, I'd rather you wait for retest to this level, and then I'm more interested in trading upwards. Yeah, for a time being, due to the ugly looking rejections candle we have over here, I'll prefer to stay out of this way. Now let's come to the most important of all pairs. Yeah, I don't think anybody would say that I'd rather not trade the dollar because it's really so price heavily against everything. Let's see what dollar has been up to. Oops. Now, you can see that just to be more clear, this is if we cannot we absolutely cannot ignore this horizontal level. See, it has rejected once, twice, third time. But let's look at what happened in the past. In the past, when it comes to this level, we have a very, very clear-cut bounce off this level. Engulfing, you can tail bar, and then it goes to a bullish bar, tail bar, bullish bar, and then a bearish bar that comes back to retest this level. Yeah, so it has not happened in the past, at least 3 months, 6 months, in fact. Yeah, it has not happened in the past 6 months. So what I suspect might happen is that due to Donald Trump policy, dollar might further weaken, even though I don't think that's what he intended for the time being. I'm not too sure if that, but whatever it is, it seems that price might want to break $96, and then for the swing trader, be it the daily or 4-hour chart, we can actually wait for a retest for it to go down again. Yeah. So this is simply a bearish bar, a rejection of this level, followed by a retest of this level. Now it seems that, and look at the past price action, pretty bearish, I would say. So it seems that price really, really wants to head down. Let's give it some merits. Now, cat is just simply screaming that I want to go low. Why? You can see that even from last year, September, all the way till now, which is a good 5 months. It has tested this level 1, 2, 3, 4. This is the fourth time. We might say that this is the fifth time within a span of 2 weeks, 3 weeks, in fact. So I'm giving it a grade of really, really bearish that it might want to come down all the way to 72. Yeah, so this is a good run for a 4-hour chart. So with that, let's look at how some of the pairs are setting up. So again, yen and kiwi strengthening, possibly strengthening, dollar and cat possibly weakening. So let's pair the weak against the strong. That's how we would do it. Cat yen first on my list. For our chart, there. So cat yen, very nice double bottom, and then you can see that price from here, we have a pretty consistent lower high. I'm just waiting for price to actually break this nice looking double bottom, a break and retest, and I will go short at it. Yeah, I won't immediately go short, but really my standard way of trading, for those of you who have been listening to this for long, is really a break and retest of any level. If you don't know what's a break and retest, what I'm saying is that simply I'm waiting for price to give me a lower high. A lower low and lower high, I'm pretty happy to go in. That's cat yen. So Kiwi, I'm looking, okay, again back to it. Kiwi, I'm looking to strengthen, and Cat looking to weaken. So as such, Kiwi Cat, same old story. Nice looking level. You can see that touches 1, 2, 3. So for those of you who recognize this is a wedge, I'm waiting for price to break this nice looking horizontal, retest this level and go up. Again, if you don't know what is a break and retest, for those of you who are new, I'm simply looking for a higher high and higher low at around this region. Yeah, I wouldn't say it's a line, it's always a region. a break and retest or higher high and higher low, and this is where I'm happy to go in. If really price just really dongles between here next week, I'll wait for a break, really a clean break before I go in. Kiwi dollar, more or less the same story. I can draw a line to connect it, but you get the idea. Waiting for price to give me a higher high, higher low around this region. I'm happy to go in. And the last on my list, which is really pairing the weakest against the strongest, you can see that dollar yen and cat yen has I think very similar looking chart. Yeah. So when it happens, don't pounce in both at the same time. You might just have a double restrict. Yeah. Choose one which you think is set up the most nicely. So again, giving me a lower high, a lower low, and lower high around this region, and I'm happy to go in. Yep. So this is my analysis for the week ahead. With that, I'll hand it over to Alexis, and let's hear what she has to say about fundamentals. Over to you, Alexis.
All right, thank you, Lloyd, and hello everyone, and happy New Year. Okay, sharing the screen now. Today I'll be talking about the yen and probably a bit of the euro as well. So I think there was this fund from Germany. I think Germany is implementing a massive 500 billion special fund. It is meant to overhaul the national infrastructure and strengthen defense, etc., etc. So this was in 2025, but the question is when will this be implemented? Now, when we look at the website I use, which is Trading Economics, let me just put this down. Okay, so when we compare the stats from the Germany side, now the reason why we compare the stats in Germany as well while looking at the Eurozone is because in the entire Eurozone itself, Germany holds one of the larger GDP portfolio over there. So Germany, France, Italy, they kind of lead the Euro's standing. And the question now is whether or not there will be a delay in the spending, because if there's a delay in the spending of this money, which was already planned for, it could lead to a weaker euro as growth expectations would then be downgraded. So we're looking really at what is happening in the policies in the euro region. And overall, euro is really one of the slightly more, I would say, most people trade the euro dollar, right? So currently, if you look at the dollar itself, the dollar has very volatile sentiment because of what's happening in the Trump, and it kind of hit the highest level against the dollar, I think, early 2021. And the Eurozone has weathered most, the majority of the energy crisis. And what has happened also is ECB has actually paused the rate cuts. So the ECB rate cuts are at 2.15 now, which is kind of paused, not very high as well. And if a strong euro comes in, it'll be a concern for the economy because this economy relies heavily on exports. So things like the European cars, like the German cars or French luxury items, things that are more expensive for foreign buyers. So what we're looking at is where the policies for the Europe region will go moving forward. Now, when we look at the entire Euro region, it's a little bit soft in comparison. If you look at the GDP figures, very low, very flat. Inflation is also below 2, which is not a bad thing, but it also hints that inflation isn't, if prices are not increasing, okay, so if prices are not increasing, there is no desire for companies to produce more. In a very basic way of explaining why prices should have a healthy increase is because you want to have a bit of productivity over in the Eurozone. So productivity looks to be a little bit stagnant. Now, although the unemployment figure 6.2 in the Euro region is actually pretty low in this sector, but if you compare it with other economies that are in a slightly faster recovery mode, the euro actually looks a little bit towards the softer side. So what I'm looking for is a slightly softer euro. Now, I prefer to pick the euro because I would say the economy is a bit fragile right now. Energy costs, Germany and France, the economy is a bit split. GDP growth is very slow as well. So I think the euro is currently a little bit fragile, and that's where when I trade the fundamentals, I want to pick something that's strong and robust versus something that's weaker. The strongest versus weakest, essentially to find that potential of a move. Now, the next thing I want to look at is the Japan side. Now, Japan, I think last week there was if a lot of the Japanese pairs started turning around, and it's really basically because of the new prime minister's kind of policy stance as well. So they are a bit more hawkish right now and the policymakers over there, they are debating on whether to increase interest rates. They're talking about how their inflation rate is 2.1%, is pretty high right now. What can they be done? Should they really control the interest rate, etc., etc., right? So it looks to be right that because the Japan's new female leader is a bit more aggressive in the way it's moving its economy, and having won the election, I think she's really bent on showing up for it. So something different is going to happen. So what I do see an opportunity actually is in the euro yen. All right, so now the euro yen, I'm on a daily time frame right now, but what is really interesting is you go on a monthly time frame. Now, this is a monthly time frame. This is the euro yen that looks all the way to, I would say, the 1980s, 1990, right? So around the 1989, 1990 period, you can see price actually hit 187, right? And then price has never hit there before. And all the way very recently, I think just last month, it kissed 187 again. So two things weigh on me down here. On one side, the fundamental aspect is we're looking forward to a weaker euro and a slightly stronger yen because of its potential increases its interest rates plus potential recovery and intervention. And also, I think the Bank of Japan has hinted that they will be tightening, right? So they're not going to provide so much liquidity in the markets anymore from the bond perspective. So coupled with the technical aspect of this pair becomes a bit interesting to me because on one hand, you have a very strong resistance level that has been untouched for the last, I would say 20, 30 years. It has, if you kind of zoom out and look at this, it kind of looks like a double top. If you look at from this period all the way to now. So if price, I would think the probability of price breaking above this is probably about 20, 30%. So there's a higher probability that this price will be pretty strongly respected and rejected, and that is why euro yen is the currency pair that I'm looking at right now. So if we go back down to the daily time frame, okay, you can already see price, the structural, from a technical perspective, the structure has already broken. You have the high, you have a lower high, you have a low, you have a lower low that's already broken. So very similar to Lloyd, I don't really like to chase the price. I would prefer price to retest, meaning come back up to a previous high, giving me a lower high from this, and then see whether we can find an entry from there. All right, so euro yen shorts is what I'm looking for. The other psychological factor is the 170 to 175 area. So basically it's this area over here. Now, this would be my first level of support, of strong support over a medium term. If the Bank of Japan continues its policies where it says that it really will increase interest rates in March or April, then I think there's a good probability that price will slowly meander down towards this level. And if it does break this level, maybe you'll touch this level. So this is somewhere like a medium to long-term plan on an overall basis over here. So euro yen short is definitely what I'm looking for in the short to medium term. And on another way to enter this is if you go to the shorter time frames, all right, because on the daily time frame, price has already broken the previous low over here. If price is so strong on the downside, it might not retrace back up. So we can probably find opportunities on the lower time frames like the H4, the 4 hours, or even the 1 hour to see whether price gives us a little bit of retracement before jumping in on this pair. So the euro yen is something I'm looking at. Now, with a stronger yen, of course, we have to kind of peek at what the dollar yen is doing as well. Now, dollar yen, I'm not super a fan of holding the position because all the dollars are very volatile right now because of just Trump being in power and what's happening in the gold market. So the dollar is a very volatile currency pair. I don't like to hold it. I much prefer to trade it. Do I think there's room for dollar yen to go down? Yes, but my key level is to make sure that it can really healthily go below this level. And then once it cracks this level, then I'll be a bit more confident taking it downwards. So what I don't want to get is to get trapped when price is bonging around this level. Even holding the trade is not a good idea because the dollar can flip in any minute. Because at this point, is there a reason fundamentally for a weaker dollar? The answer is not quite. Fundamentally, in terms of GDP, in terms of interest rates, in terms of inflation, the data shows that the dollar is still robust. But sentiment starts to turn negative. So if one is saying positive, one is saying negative, I'd rather just stay out of it. So not going to hold this pair, but more just trade it if it pairs up with your strategies. We trade the dollar yen. Okay, not going to hold a particular direction, but the opportunity for a short is there if price can break certain levels over here. All right, so that's basically all I'm looking for. I'm looking for a healthier Japanese yen that that has just about started turning, looking for a potentially weaker euro. And I think the other currency pair that I'm actually looking at is the Aussie. But the Aussie, the difficulty I have currently is pairing the Aussie, right? What do I pair it with? Because although fundamentally it is interesting, and I would prefer to go, for example, short the Euro Aussie, which does look like it has a little bit of room to go, but it's not enough room to want to again hold it for very long. Okay, so I do think the Aussie has a little bit of strength in it, and I've been talking about it for the last couple of weeks as well. But it just technically it doesn't look like a very nice place. So it's just wait and see for the Aussie pairs for me now, although I think the Aussie is on the road to recovery. So that's all I have this week. So basically, I think it is really good that I think my yen strength actually pairs up with where Lloyd is looking at. So I'm glad the currency index has also paired up, and that's what we like in our analysis, to see confluences in what other traders are seeing as well. Because if Lloyd is seeing that technical confluence, I'm pretty sure around the world there will be many traders also coming to the same conclusion, and that's where we get our sentiment moves.
All right, so one thing to clarify is that both Alexis fundamental and my currency index, as you can see that I look at my currency index on the weekly chart. Alexis fundamental is also can be looking at the very long term. So it doesn't mean that it's only available for the intraday traders or for the week ahead only. Sometimes it can hold its water for up to 2 weeks or more. Yeah. So this is for those of who have a new account holders who only trade the daily wave rider. Just take note of our analysis. It does work for the daily chart too. Right. So with that, won't be holding you